Hi, my name is Contreras. I'm a financial advisor with over 15 years of experience working with clients. And in this video, I'm going to give you 4 tips as to how you can invest in the stock market and be able to take advantage of the growth potential of it in case you don't know how to do it or how to get started. So here we go. So tip number 1 is we're going to invest in all of the stock market. Now, because you don't know how to invest in individual companies or individual stock, that requires more research, that requires time, that requires you to really understand the fundamentals of that business, the economy of that business, its competitors, its management, and the results that they produced, and basically how to value that company compared to the price of its stock and to see when would be a good buy. It's hard for most people to do that, including me. So by investing in all of the stock market, you don't have to do that, and you get to take advantage of some good benefits and strategies by doing that. So number 1 is diversification. So by investing in all of the stock market, you're diversifying all your money, meaning you're not investing all your money in like one basket. You're investing it in several different baskets, which is several different companies. Number 2 is asset allocation. So what that means is that all of your different buckets that you're investing your money, they're all different, right? A lot of the companies you'll be investing in all the different types of industries in the economy, like technology, utilities, energy, real estate, consumer staples, financials, et cetera, so that you kind of have a good mix and you're in a lot of different areas that sometimes don't correlate or move the same way. Sizes as well. You'll be investing in companies that are large, medium, small, nano. You may be even surprised that some of the companies are some of your local companies that you didn't think were in the stock market, but they may be. And also geography. By investing in all the stock market, you can have companies not just here in the US, but potentially globally, in Europe, in Asia, Latin America, Australia, Middle East, so that, you really have a good variety of mix, and thus, it's your risk of investments is a lot less. Your risk of losing money is a lot less as opposed to just investing in one company. Number 2, you want to use mutual funds and ETFs to help you invest in all of the stocks. Now, why are these good? It's because these funds have manager or managers that get all the investors' money, and they invest it based off of the objective of the funds. And there's a lot of different funds that invest in a lot of different things, but there's funds that invest in almost all of the stocks in the stock market. So you just want to look out for those that have those objectives. And so, for example, there's some funds that invest in the S&P 500, which is the Standard & Poor's 500, the top 500 companies based off of market cap or market capitalization in the stock markets. There's also the All U.S. Stock Index, which includes basically all investable stocks in the U.S., so that includes S&P 500 and all the other ones, basically. And another one too is the All World Stock Index, which, as you can tell because of the name, invest in all the companies all over the world, including here in the U.S. So that would be like a one and done option for some of you if that's what you want to do. But mutual funds and ETFs are a great way to be able to invest in all the companies without you having to individually buy all the companies. You could just buy one of the funds and you're done. Number 3, you want to use what's called index funds. So in the world of mutual funds or ETFs, there's basically 2 types of funds. There's an active fund and there's passive or index funds, they call them. So active funds means that the managers try to beat the average, which is the index, and they generally tend to charge a lot more and in the long run, they don't really beat the average. They actually, the majority of them don't beat it at all. So it's actually better if you invest in an index fund. And the index fund, some of the examples I gave you before, there's the S&P 500 index. There's like the all world US index, like the ones I mentioned before again. And so you could, index is generally in the name of the fund when you search for them. But another way to find them is by the cost. So they're generally the lowest cost, and so for the funds, the way that they go by cost is the term gross expense ratio. So that's how you know what the cost is of them. And so for the index funds, they're very low, like 0.01%, I think. Some maybe even zero. Yes, some are actually zero. But for example, here 0.01. So that would mean that per $100 that are invested, you're basically only paying 1 cent. Very, very cheap. And so some examples of some of these funds that are indexed, that have index funds, are Vanguard. Vanguard is the most popular and probably the biggest because they're the ones that started it all. Mr. Jack Bogle, thank you so much for Mr. Bogle for being a pioneer back in I believe it was in the early 70s or mid 70s that he started Vanguard and created the first S&P 500 index. I believe it was the S&P 500 index, but it was back in the 70s, and that's why Vanguard is one of the most popular ones. Schwab and Fidelity are also other companies that offer index funds. Now, just a caution is that not all companies that offer index funds have the same cost. These tend to be very similar. Sometimes, they kind of go back and forth as to which one is the lowest one. But other companies that offer index funds, sometimes their cost is like 10, 20 times what these are. So just, if I were you, I would just sort by the gross expense ratio to from the lowest cost to the highest. And these three companies should come up when you do your search in the at whatever brokerage company you're using, whether it's Schwab, whether it's Vanguard, Fidelity, and you search for the funds, they should come up as some of the lowest. I'd be surprised. Well, there may be other ones, but these are generally the lowest, like across the board, across the entire financial industry. But yeah, these should be some good examples that you can use. Number 4, you want to have a long-term time horizon. So that's the mentality that you should have when you invest. This isn't a quick get-rich-quick scheme because that's very hard to do, and good luck doing that. These investments take time to grow, and so you want to plan on investing money that you don't need anytime soon. If you need money in a year or two, you probably want to put that in a secured, like FDIC insured, like high yield savings account, maybe a CD or a money market fund, but not in the stock market, because in 1 or 2 years, a lot of things can change. So you want to play the long game. You want to invest money that you don't need anytime soon, and that you could put away for long term, at least 5 years or more, because there's in the business cycle, there's ups and downs, and so you want to let your investment time to grow and accumulate. And right now, with what's going on here in the U.S. with the current administration, with the tariffs and then other countries also reacting to that, there's a lot of volatility. It's generally not good for the stock market in general, because companies, the market likes stability. It doesn't like instability or not knowing what's going to happen. So yeah, a lot of movement going on. But if you stick for the long term, you have a better chance of not losing money. There's still risk, but you have a lower chance of potentially not losing money. Thank you guys so much for watching the video. I just want to let you guys know that I started my YouTube channel, I think about 3 or 4 years ago, but I haven't been that consistent. And so I'm restarting to post videos again, so that I could provide you guys with more tips and guidance on a wide range of financial topics. And to me, it's very important for me to do this because the reason I got into financial advising is because, growing up, I didn't really have, people tell me or talk to me about, financial management, money management, investments, and things like that. And I like doing that, in my practice, helping people do all that with all the training and licenses that I have. And so I also want to share that with you so that you guys are able to have some good information for you to improve your lives financially, because we all deal with finances, we all deal with money and debt. But I very much believe that the more informed you are with these topics and these things, I think the better decisions you'll be able to make and better results you'll get because you know more. And so I wish you guys all the best, and thank you again for watching. If you liked the video, please, hit the like button and consider subscribing to my channel, because that will definitely help me grow and also to post more videos. So until the next video, I wish you guys all the best, and I'll see you then.